Glam, thanks for putting that into perspective. Well, let's understand more about the paint sector and let's get chatting with the management of Kansai Nerolac. Well, we have Anuj Jain, Managing Director of the company, who joins us. Hi, Anuj. Good speaking to you. Thanks so much for joining in. Well, the top line growth is just around 5% odd. Now, we know prices have gone up. So would that mean the volumes degrew in the past quarter? If yes, then by how much?
Yeah, so it's right that in the last quarter, Jan to March, the value growth is around 5% and the volume growth is negative. So that's true. And as I think you are showing on your channel, I think our contribution from the industrial is higher. But in the last quarter, I would say that the growth in industrial is little better and decorative is almost flat.
Is the degrowth? Could you quantify it, the volume degrowth?
So it's like you can say about -7, -8%.
Anuj, good morning. But this is a very sharp, sort of contraction that we have seen. At some point, do you think it will get arrested? Are you taking any steps for that? Because the margin number looks a bit of a shocker here.
See, if you look at the margins, ultimately, you all know that the kind of inflation what we are seeing, it's unprecedented. And in decorative, the price increases have already been taken. But because of the geopolitical situation, again, we are seeing the further inflation. And in industrial, again, we have taken a very good price increase because despite the auto sector is not doing well, we have taken, but it is still not able to mitigate. But I think overall, if you compare within the industry in terms of the cost management, I think we have been able to do okay. What we have missed is the top line in the fourth quarter. I would take fourth quarter as one of the outlier quarter, because if you look at for the year, our top line growth is around 24%. And even the volume growth is quite decent. But a lot of price increase, especially in the decorative, have been taken in the third quarter of the last year. And then starting Jan, because Jan was impacted partly because of the COVID, and also because a lot of price increases have happened, the trade was completely stocked, and therefore the growth was not much. And it was coming only from the lower end products where our participation was not much in the fourth quarter. So we have taken actions in terms of the product distribution. We have understood, because yes, to an extent our growth is lower than the market growth, and actions have been taken. And our priority is to see that how do we arrest this decline.
So would you want to? So for example, I mean, you've basically cut advertising spends by some 50-70% over the last 18 months. Is that correct, Anuj?
So yeah, last 2-3 years, because when the COVID was happening, that time we reduced our marketing expenditure. And now if you see from the last quarter, we have started increasing the marketing expenditure. But last 18-24 months, yes, we have cut it.
Compared to pre-pandemic, where are you now in terms of advertising expenditure in Q4, for example?
So, I won't be able to compare in terms of the figure, but I can tell you that, pre-pandemic, that time, in fact, we were going very aggressive in terms of our marketing. Our idea was to build the brand scores, which we have been able to do, and then we wanted to balance it out. But in the pandemic situation, obviously there were certain decisions which we had taken, and the situation was very uncertain. I think we have learned from that situation, and now some corrective actions we are taking, and whatever share of voice is required to be there in the market, to that an extent, we have increased our advertising expenditure.
Okay, all right. Anuj is suggesting that marketing spends will go up from here on. But two-part question I want to ask you. One is on margins. You gave us some qualitative inputs on your margins. But what is the margin band you should work with? From this 5.5%, where does it go? Could it get a lot worse before it gets better? That's first part on margins. And the second part is you have not grown as much as some of your peers. And we had the management of Asian Paints that said that they have gained market share. So what is your market share? Color on both your margins and market share. Go ahead.
So in terms of margins, that's why I said that if you look at the fourth quarter, it is one-off. It is like one quarter which is kind of outlier, because there were certain provisions which were to be taken, and therefore in terms of margin, it is one-off. What you have to look at is the year margin, which is about 10%, 10.9%. If we divide our business into two parts, in decorative, almost whatever inflation was there, the price increase has been taken. But further, because of this geopolitical situation, we are seeing further inflation in solvent-based product, and therefore some further price increase would be required, which we have already initiated. So in decorative, more or less, we'll say that the margins would be protected. When it comes to the industrial, despite heavy price increase, which is about 18% we have taken the last year, but the inflation is continuously going up, and in industrial, most of the products are solvent-based products. So we are approaching the customers again, and though it's a difficult situation, but I think somewhere we'll be able to balance it out. We are approaching them again to get further, the price increase. When it comes to the top line, as I said that, the market, some kind of downgrade, we have seen in the market, and there are low-end products which have done well. There has been a shift from unorganized sector to the organized sector, and because of this industrial and the decorative mix what we have. Also, I would like to highlight one more point that in our case, because we are the unique company who has quite a good balanced mix of industrial and decorative, and typically in the quarter like Jan to March, our mix towards industrial is quite high. The decorative mix is lower and the industrial mix is higher, and that also affects the profitability when it comes to the Jan to March quarter. So therefore, that's not the quarter which one should be able to compare, because going forward in the coming quarter, the decorative mix would be higher than the industrial mix, and to that an extent it will support.
Got that point, Anuj. So going forward, then what's the mix going to look like? And in terms of capex, are you going to hold back some of it given the current environment? Or even if you do, would it be more towards decorative than industrial?
No, so we are committed to our business, and whatever requirements are there and whatever capex we have committed, we'll continue on that, because we still believe that even in the this situation, the growth would be closer to double digit in terms of volume, or single high digit growth. What we are expecting in both businesses, and to that an extent, that whatever capex is required, we'll continue on that.
Right. Anuj, could you give us, I just want to come back to that advertising. I'm only coming back to advertising and marketing spends because paints is a very high visibility area, right? I mean, we see advertisements in newspapers, television, etc. And I don't know how much that influences the customer, but is that starting to hurt you? The loss there, that you're not that present anymore, because what we've seen is a very sharp pullback there to counter raw material pressure, etc. maybe. But it's a feedback loop, right? So you'll have to break that and spend more of the compromising margins for some time. I mean, what's the strategy really?
No, so in paint, when it comes to the decision making, I think there are multiple verticals. So one side there is a consumer, the other side there are influencers like painter and interior decorators, and this marketing or advertising play its own role in terms of maintaining the saliency. But I think in terms of brand scores or the mind shares, that our shares are still good. But I would say that, when you try to pull back the advertising, obviously to some extent the momentum is affected, because ultimately you deal through the dealers and the painters. To some extent the momentum is affected. And we take it as a part of the learning, because in the pandemic period, when the first wave came, it was around, that period was quite good for the advertising, and the advertising did not happen. And in the rest of the period, even if we wanted to do it, how much it would have contributed, very difficult to know. But we only take it as a learning that, okay, beyond a particular point, I think the share of voice is to be maintained so as to generate or keep the momentum on. But there are a lot of other qualitative activities which are around influencer management, which are around lead management, which is through the digital. I think those are more qualitative steps to see that how you are able to increase your revenue.
Okay, all right. Before we let you go, we need a few numbers then, Anuj, and try to help us out with that. Your market share. I tried earlier. I'm trying again. What's the current market share? How does it compare with earlier? As per your the numbers that you maintain itself, and also the margin band for last year, as you mentioned, it was 10 to around 11%. For this year, what is it likely to be? Go ahead.
No, so market share is very difficult to print, because what happens is that we have a lot of businesses, and in some of the businesses, the figures are not available for the market, and it depends, that which company, for how many companies, they are taking the base, and therefore the market share is difficult. I can say that in decorative, we are about 10 to 11% market share. And obviously, last 1 year, there is some drop in the market share. Industrial, when it comes to the automotive, where we are leader, we have, maintained or slightly increased our market share. And the other categories, which is non-auto industrial categories, there we are able to maintain our market share. Margins, I won't be able to give any guidance. What is important is that, as I said, that in decorative, situation is comfortable, but we still have to keep the finger crossed and see that, what further happens. Because when we met last quarter, we never expected this change in the geopolitical situation and to what extent it will impact. So last quarter, the crude was 85 and no one expected the crude would be 100 or 110, which the current situation is. So I think we are working with the various scenarios that if the crude remain between 100 to 110, then what would be the margin? If it is less than 100, then what would be the margin? But very difficult to forecast the number at this stage.
Good speaking to you, Anuj. Thanks so much for joining. It's been a tough and working environment, but you seem optimistic that both the segments should fire going ahead. That's decorative as well as industrials. From the lows actually of the day, the stock I think initially was down close to 5.5%, or it's come off a little bit from the day's low. We'll slip into a short break, but on the other side, we'll connect with Yogesh Singh of Trilegal, and we'll also connect with Mangesh Badam of